Welcome back. So we've got the market up 40 points and things are steady. Manishi Raychaudhuri of BNP Paribas is now joining us on the show to take us through what he's making of things. Manishi wrote a note on the dated the 22nd of November, which is the last Friday, and he kind of sort of outlines his feedback after meeting policymakers, economy watchers, corporates, etc., and what he took away from all of that. So my question essentially is exactly that, Manishi. What did you take away from it? Because, by Friday, a fair bit of action has already transpired. And this is last week. Bulk of it sort of happened last week. So some positivity surely is in the system. But on the other side, we have a pretty poor macro and economy picture. Not macro, but economy picture. Second quarter GDP numbers this week. What's your sense?
Absolutely. I would summarize it in one sentence, and that's the title of that note. A slow, gradual, slow grind ahead. It's not going to be a V-shaped recovery by any means. There are government policies which are being acted upon right now as we speak. There is likelihood of some degree of fiscal stimulus in addition to what we have seen earlier in the form of the corporate tax rate cuts. But at the same time, the government would also have to watch very carefully the fiscal side of the budget, which is not looking good at all at this point of time. So it's a combination of many things. I think the government understands that there is a degree of fiscal push that is needed, in addition to the monetary push that's already coming in from the central bank. But to some extent, because of the fiscal conditions, the government is hamstrung right now. The silver lining is that some of the other policies that we are seeing, particularly in terms of divestments, that is encouraging. And if we do get some of the announced divestments off the board, if we do get them executed over the next 3 to 4 months or so, that could not only add to the positive sentiment, but it could also add to the government's resources, which are so important at this point of time.
Manishi, your report in fact talks about how India and Taiwan have been the key beneficiaries of recent revival in flows. So do you think that despite all of these concerns when it comes to fiscal deficit, what we are seeing in the markets is primarily liquidity driven?
To a large extent, yes. If I look at the past 8 weeks or so, Asia ex-Japan, as depicted by MSCI Asia ex-Japan, has moved up about 8 to 10%. And to a very large extent, that's been driven by the flows, which in turn have been triggered by a declining risk perception or increasing risk appetite on the part of investors. And a significant part of that has been driven by some of the global or regional geopolitical concerns receding. So we now have a significant possibility of a phase 1 trade deal being agreed upon by the US and China. We have much lower probability of a no-deal Brexit, which we would get to know by end of January. We are also in a situation that much of the global geopolitical turmoil, which used to get reflected in the variables like higher oil prices, are increasingly having a much milder effect than they used to earlier. So I think a combination of all this has increased the investors' risk appetite about risk assets, in particular about emerging market equities. And India has been a beneficiary of such flows. To some extent, it is a bit surprising that India and Taiwan were the biggest beneficiaries of that. I can understand about Taiwan because that's very strongly linked to the global supply chain. But India is not exactly in that bracket. So India being a beneficiary of the global flows, in the context of declining GDP growth estimates, in the context of a very tight fiscal scenario, does come as a bit of a surprise to us.
So then 2 questions. Is the foreign money betting on some recovery sooner than later? Or, well, it believes that eventually it has to fall into place. So there's no point getting out. And second, for local investors who are watching the same things, I mean, what's the choice? Except becoming momentum investors? Is there any other way to be in the market, participate?
Right. Right. So, as far as foreign investors are concerned, I think it's a realization that India, despite the expensive valuations, despite a slowing macroeconomic growth scenario, still offers a good set of stocks to invest in. And this is a point that we made in the report, that everyone who's a long-term investor ultimately looks for compounders. And the Indian market has been one of the rare compounders in the Asian investment firmament. It is depicted in the relatively stable earnings growth of the top tier companies in India. It's also reflected in the low earnings growth volatility that accompanies this relatively higher earnings growth, which is possibly a rare combination, and a combination that investors always look for. So I think when it comes to India, it is basically the ease of stock selection, even though those selected stocks, which are the relatively high quality stocks, are now expensive. And there's a gulf of valuation difference between the high quality stocks and the cyclicals. And that actually brings me to your second question: what are the domestic investors doing who don't really have a choice between various different markets across the emerging universe, and who are forced to invest in India? I think they are sticking to quality for the time being. This is the feedback that we received from the domestic investors also, that they're still, for the time being, going with the top-rung private sector banks, the top-rung consumer companies, or some of the IT companies, which have exhibited this high-quality characteristic, but which at the same time are expensive. Unfortunately, that's the story in India right now. You have to stick to quality, but at the same time, you have to be prepared to pay a price for it.
Okay. Manishi, just before we let you go, I just wanted your thoughts in terms of the stocks that you would probably be more bullish on in the Indian context at current levels, as well as what kind of appetite do you see for the likes of BPCL, which is on the divestment agenda?
Sorry, I lost audio.
Manishi, is my voice reaching you? Okay, I think we've disconnected from that interview, so we'll try and get back to Manishi. But in general, that's the view coming in from Manishi Raychaudhuri, that a lot in what we've seen in terms of India has been liquidity driven. We'll take a break on that note, and we'll be back with